Depletion method. See, the depletion method of depreciation will be suitable for um, any natural resources or depleting assets. Depleting assets. Any natural resources available under the earth on excavation, the quantity will be decreasing, right? That will be considered as depleting assets. If you are having any technical evaluation, how much of coal or steel available or steel ore available in a particular locality like copper and all, we will have the technical experts to give the estimation. Sir, here is so much of quantity may be available, and oil, okay, natural gas, and all these things are called depleting assets. Once you start extract all those things, sometimes later that becomes zero. You might have heard about the KGF. Yes or no? KGF, very popular because of the movie. Kolar Gold Factory. Sometimes ago, not sometimes ago, a century ago, okay, gold was available there. Now there is no gold at all. Yeah, of course, gold is there. Here are there some way. But extracting 1 gram gold costs us for 10,000 rupees, where already the gold is available lesser than that rate in the market. So, extracting any more gold from the KGF is not viable and not cheaper. So, they might have estimated how many tons of gold available, so gold available in that gold Kolar gold factory. On extracting gold year after year, that might have been depleted. So, depletion is nothing but any assets available under the earth can be removed out, and on removing the quantity will be decreasing. And to get the gold, means gold or coal or oil extraction, you have to get the permission from either government or the landowner. Government will give the license. The amount you are paying for getting the license to extract that will be called as asset, depleting assets. The license will anyhow becomes worthless once all the assets extracted. In those cases, the depletion method will be available. It's not only payment of the license fees and setting up of all the extracting, the digging well and whatever it may be. Those costs will also be accumulated. Not only that, after extracting all the minerals available from that particular land, what happens then? It seems to be full of potholes, right? Potholes, right? It is very dangerous unless you reset that. So you need to keep some money away as a reserve to reset once you complete your project. So that will also be forming part of your depleting assets value. What are the value? What are the things will be comprising the value of the asset here? Depleting assets, the license fee, first time startup cost. On closure, you have to do some resetting, site restoration. That site might have been damaged, right? So site restoration expenses. These three will be called as assets value. Okay, divided by the estimated coal or gold or barrels of oils available there will be the denominator value to find out the depreciation per unit. We will discuss that along with an example here. Pensive Corporation Subsidy Pensive Oil Subsidiary. Pensive Oil drills a well with the intention of extracting oil from the known reservoir. So there is a oil available, and also it is also known place. There is definitely reservoir is a place where we are storing all these things. We are aware about that. There we have the oil. It incurs the following costs related to the acquiring of property and development of the site. Land purchase. We need to get the land, no, to extract that. And road construction. Usually the mining, no, will be almost off the road or far away from the city where we don't have the road facilities. You extract it. How can you bring that to saleable place, market? So you need to construct the road also. And drill pad construction, to put the drill pad, and it costs us 48,000, and drilling fee overall 5,43,000 is the initial cost. Even rather than land purchases, if you are not being the owner or the owner is not allowing to purchase, but he gives you to use the land for extracting, then it's a license fee. Either it may be land purchase cost or license fee, both may come here. In addition, Pensive Oil estimates that it will incur a site restoration cost. After the project, you have to reset the site, right? That cost us rupees 57,000. once extraction is complete. So once the extraction is complete, you have to spend this 57,000 also for reconstruction, site restoration purpose. Overall, so the total depletion base of the property is 6 lakhs. So if you want to enter into the project, your overall estimated cost being 6 lakhs. That 6 lakhs is the depreciable amount in the case of depletion method. Is that okay? Now, pensive geologist estimate. So there's an estimation how much of the minerals available under the earth. He estimates that the proven oil reserves that are accessed by the well are 4 lakhs barrels. What is the quantity available here? 4 lakhs barrel. So from this it is very clear that depreciation is equivalent to what? Depreciable amount by any life. In this case, see, that's how you do know. Original value minus scrap value divided by life. Life in years. Usually this is the amount of depreciation. Original value minus scrap divided by number of years of life. But in this illustration, you have to add the site restoration cost also. Okay. And life represents the units. That's all. The normal depreciation. So here the depreciation is equivalent to the numerator value. This is nothing but depreciable amount. The depreciable amount is nothing but 6 lakhs. You spend 6 lakhs rupees for this project, and the number of expected barrels can be produced as per the technical evaluation being 4 lakhs. So for extracting 4 lakhs barrel, it costs us you 6 lakhs. It means for every 1 barrel of extraction, it costs us you 1 rupee 50 paise. This is what about the depreciation per barrel. Depreciation per barrel. Okay. Pensive oil extracts 1 lakh barrels and 3 lakh barrels in the first and second year. So number of barrels extracted. Barrels extracted. Okay. How much? Year. First year, second year. In the very first year, the barrel extracted being 1 lakh. In the second, the barrel extracted being 3 lakhs. Okay. What is the depreciation? Depreciation under what method? Depletion method. Barrel extracted into depreciation per barrel. Depreciation per barrel here is how much? 1.5. So 1 lakh into 1.5, 1.5 lakhs is the depreciation for the first year. Second year, 3 lakhs into 1.5. 4.5 lakhs. Almost entire value was depreciated over the 2 years period. Really, in a real life, it's not 2 years. It may be almost 30, 40 years also. In Saudi, where the oil is the main predominant economic resources, right? They could have they are extracting the oil since very long ago. Almost 1960s, they started extracting the crude oil and selling for entire country, in entire world. Right, for petrol, tar, benzyl, and a number of ingredients are there. Right, still in 2022 also still they are supplying, capable of supplying, and they still can supply for another at least a decade. At least a decade, right. So then they might have estimated and they will find out all these costs the same way. So for all this oil extraction, coal, gold, and copper, sterlite, right, in Tuticorin. Sterlite copper factory. In all these things, this depletion method of depreciation will be adapted. Clear? Come on. Yeah, 1,50,000, right. Okay. Now, make a note of it.